I think it gives a little bit of a false assumption like, oh, just invest and, you can be making all your money from that, which is obviously not true. Like if you're somebody that doesn't already have a big net worth, like your best chance to change your life in the short term is getting a higher income, right? And then taking that higher income and investing that money so you start to grow your pile bigger and bigger and bigger. So then 5, 10, 15, 20 years from now, that pile is so big that whatever you are making for income is small potatoes compared to what you have coming in terms of investment income, right? Hello, chat. Got a lot going on here today, folks. A lot going on, including FedEx earnings after the bell and the conference call we're going to listen to, which is going to be very interesting. Very interesting. Because we're going to get to find out a little bit about the economy. I don't think there's not many companies better than FedEx to understand what's actually going on in the economy right now. Trump wipes out Biden's lead with Latino voters in 2024. Oh, that's interesting. What's going on here? The newest CNBC All-American, blah, 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 blah. 5-point lead, Latino voters against Biden compared with Biden's 7-point lead over Trump in October. Oh, interesting. Biden's performance with Latinos is not just lagging relative to Trump, it's trending downward overall. In December, 28% of Latino adults approved of Biden. Wow. Down from 35%. Wow. Biden's plunge among Latinos is a fresh warning sign to Democrats that the party could be at risk of. Wow. B-Man's in trouble. Holy smokes, man. Middle-class Americans want to know how the wealthy make money. Oh, okay. How? 50,000, 150,000. How America's top earners make money. The bottom 80% of U.S. households receive more than 93% of their adjusted gross income from wages and retirement income. By comparison, the top 0.1% of households get less than 25% of their earnings from wages and retirement income. These top earners receive most of their income from investments such as definitely not taxes, such as interest, dividends, and capital gains. Well, of course, because they have massive net worths, so they have massive amounts of money to invest it. And if you have a massive amount of money to invest it, you can't make more than that. Like in terms of like it's impossible, literally. Imagine Warren Buffett trying to make more as an income than what he makes in investments. Like, it's not even plausible. So I think it gives a little bit of a false assumption like, oh, just invest and, you can be making all your money from that, which is obviously not true. Like, if you're somebody that doesn't already have a big net worth, like your best chance to change your life in the short term is getting a higher income, right? And then taking that higher income and investing that money so you start to grow your pile bigger and bigger and bigger. So then 5, 10, 15, 20 years from now, that pile is so big that whatever you are making for income is small potatoes compared to what you have coming in terms of investment income, right? So it's just math. Like all this is just math, man. It's just math. Simple. It's amazing people take all these high levels of math in high school and college, and they still don't understand the most simple math of like compounding, of like income. It's actually rather comical. Capital gains tax rates for 2023. So 20% from my bracket right here, 492 and higher. Married file. Well, this would be mine actually. Technically, 553. So that's pretty cool. I didn't realize they took it down to 0 though. Damn. Anybody makes less than $90,000, well, if you're married and you make less than $90,000 a year, you got it freaking made now in terms of capital gains. Because you got to understand, like when I was coming up in the game, even when I made little money, I had to pay 15%. So that used to suck, man. That used to be kind of annoying. I like that now you're incentivized that it's 0%. If you make less than $44,000 a year, or if you're married and make less than $90,000 a year, you pay 0%. That's awesome, man. It's awesome. And then 15% kind of for, let's call it the middle class or above the middle class. And then if you're wealthy, obviously 20%. But cool. That's actually great news. I never realized that happened though. I never realized they took it down to zero. Like Robert De Niro in Last Action Hero. Wow. Pretty cool. VR market keeps shrinking even as Meta pours billions of dollars a quarter into Metaverse. Sales of VR headsets and AR glasses in the U.S. have plummeted nearly 40% in 2023 as of November 25th, according to data shared to CNBC by research Circana. Meta has continued to burn through billions of dollars a quarter developing the Metaverse. Sales of VR headsets or augmented reality glasses in the U.S. plummeted nearly 40% to $664 million in 2023 as of November 25th. Yeah, but what is that for the entire year? Let's say, for instance, right? Because in terms of the new Meta Quest product, like those sales should have started coming in October, November, December. Sorry, I'd be curious to know that. The 2-year decline underscores Meta's continuing challenge in bringing the immersive technology out of a niche gaming corner into the mainstream. Thus far, there hasn't been a breakout success or killer app. Yeah, that's the thing. You gotta have, if you ever want something to be successful like that, it's gotta have the killer app or game or something like that that gets everybody talking and makes everybody want to go out and get that thing. And I do agree, like they don't have that yet. Like my kids play with the device sometimes, and like there's a bunch of other kids on some of the games they're playing and stuff, and they all talk and everything. But yeah, in terms of getting, masses, you got to have like a banger game. Like why do people buy a new PlayStation or a new Xbox or something like that? They buy it because of Grand Theft Auto. They buy it because of Call of Duty. They buy it because of Madden. They buy it because of the biggest, most popular games, Fortnite or whatever, that makes people say, I want to go out and get this, whatever, right? So that is the one thing that I'm like, we need somebody to come out with something that is that banger thing that gets everybody talking and says, I got to go get one of these. And then you can start building from there, more and more folks. You got to have somebody make a lot of money. When somebody makes a lot of money and that story's being told out there, it's going to get a lot more people excited to build apps and games, for those products, right? So.
But that margin expansion, that would give further evidence that streamlining efforts are working for FedEx. Investors and analysts are also both looking for a possible raise to forward guidance after FedEx beat and raised last quarter. This is also following FedEx raising its overall shipping rates by about 6% starting in January. Bernstein out with a note yesterday raising its price target for FedEx, praising the cost cutting and saying the stock is actually undervalued. Evercore's forecasting improvements in ground, in part due to FedEx winning business from UPS during the Teamster negotiations. Again, those earnings right after the bell, Scott. Back over to you.
All right, we'll look forward to you then. Thank you, Frank. That's Frank Collin. Mike, I turn back to you. I mean, NAS almost at 15K, Dow above 37.5.
Yeah.
This run goes on.
It does. And, all the signals that we've seen in terms of the broadening out of the rally, everyone's been waiting for it. You look at the percentage of stocks over whatever moving average you want, percentage of stocks making a new, 4-week high, 8-week high, anything of that sort, all says the same thing, which is a lot has gone up a ton in a short period of time.
Look at that Russell. Huge outperformance again today.
Are positive. In other words, it's
just a story of the Russell just tearing up right now.
I'm very sensitive to the idea. A lot of people are discovering that this market's up a lot. They've sat it out. They want to participate. There's FOMO, record inflows into the SPY ETF, all that stuff. But on the other hand, it doesn't feel like it's played out yet.
All right, we shall see. Thank you. That's Mike Santoli. We'll see him again tomorrow. We got a special one here at the New York Stock Exchange today because on the podium is our friend Joe Terranova. Because Virtus is celebrating their ETFs, including his.
Joe Terranova?
The Joe T. It's the 3-year anniversary. So he's up there with his family. He's going to ring the closing bell. And we're going to go out with a new all-time high on the Dow Jones Industrial Average. I'll send it in overtime now with Morgan and John. I'll see you tomorrow.
Another record close for the Dow Industrials. The S&P less than 1% from a new all-time high as well. But the small caps, the real outperformer today. That is the scorecard on Wall Street. But the action is just getting started. Welcome to Closing Bell Overtime. I'm Morgan Brennan with John Fort.
And one of the last major earnings reports of the year is due for delivery in just minutes when consumer bellwether FedEx shares results. We're going to bring you the numbers and expert analysis.
Plus, we'll talk about investing in defense as tensions ramp in the Red Sea with Doug Philippone, the global head of defense at Palantir and the co-founder of VC firm Snowpoint Ventures.
And Charles Schwab, chief investment strategist.
Palantir got me. I was like, what? Palantir?
Stocks' relentless push higher into year end and where she sees them going in 2024. Stocks climbing again today with the Dow and NASDAQ notching.
Look at that outperformance, guys. Look at that Russell. Look at Russell Wilson.
Its eighth positive day in
Just look at it.
Mike Santoli.
Huge outperformance.
Stock Exchange.
Huge outperformance.
We're almost exactly where we were 2 years ago.
All right, folks, we should get earnings out here any moment now. The FedEx conference call, looking really forward to listening to this in 25 minutes, 24 minutes, because that's going to give us a lot of intel on what's actually going on with the economy. One of the most important companies in the world to pay attention to if you actually want to know what's going on out there on the ground.
Size of the rate cuts and what's causing them, that's going to matter the most.
Right. Yeah. So I think that ultimately the trigger for the Fed to actually pivot to rate cuts will probably be a function of their other mandate coming into clearer focus alongside the inflation mandate. So the tightening part of the cycle was very much geared toward what was happening in inflation, and they weren't as focused on the employment side of their mandate. I think it's a combination of the two, and not just in the interest of easing policy because real rates go up if inflation continues to come down, but making sure that there's nothing happening on the labor market side that runs the risk that premature loosening would reignite inflation and let it back out of the bag. So I think we need to keep a close eye on the combination of inflation data and labor market data and really focus on the dual mandate, not just the inflation side.
So, Liz Ann, bringing it to the kitchen table, how do you filter for opportunity in this market? On one side, I see utilities, energy, consumer staples, healthcare have all been negative year to date, and I wonder, could they perform differently from here? But then I see the WCLD topped its 52-week highs from July 31st today, the cloud computing fund, but it's still way under the 50-plus where it was 2 years ago.
You know, in the case of energy, which is obviously in the leadership position today, I think short term it's going to very much be driven by oil prices. And you've seen oil move up from the low 70s to the high 70s more recently, in part due to, Houthi attacks in the Red Sea.
FedEx moving down, all the way to Chinatown.
So you've got that as sort of a one-off sector that is driven by obvious, war and related issues and geopolitics. The other areas, I think, you get pops in areas like REITs and utilities with the move down in rates because it brings investors back into areas that they didn't need to look for income from when they could find it in money markets or treasuries. So I think that there are individual drivers. The one thing I'll say broadly that is probably most compelling is just the equal weight. I mean, the S&P equal weight index swung in only a 1 month period of time from a 52-week low to a 52-week.
So if you're a FedEx shareholder, you really care about the EPS, you care about the margins. If you care about the economy, you just want to pay attention to revenue. We want to see revenue beats. We want to see revenue guidance better than expected. And then when we get in the conference call here in about 20 minutes, we want to hear confidence when it comes to not only this quarter, but next quarter and how numbers will look next quarter. That would be a very bullish sign for the economy.
Still itching to look for opportunities outside that very concentrated small number of stocks.
I want to mention FedEx earnings are out. We're going through them. You can see on your screen the stock is down about 5%, initially at least. Liz Ann, so tell me about how investors should think about their portfolios now. They used to say your age was a decent proxy for the percentage of bonds and fixed income that you should have in your portfolio, but that rule hasn't worked lately. What's a better one?
Well, I'm not sure that ever should have been a rule that all investors should adhere to. I think tolerance for risk is not purely a function of age. Also, understanding whether your financial risk tolerance and your emotional risk tolerance are two different things. So financial risk tolerance is what we put on paper in part based on things like age and time to retirement. But, if you're going to freak out at the first 10% loss in your portfolio, even if you have 40 years before you're going to retire, you're not a risk-tolerant investor. So there's so many
FedEx
other
just hit a
factors
new
that come into
after-hours
play.
low,
Speaking of
6.5%,
factors, I just
7%.
segued myself. I think this continues to be a market where you want to focus more on factors. Just another word for characteristics. There has been much more consistency
Oh, they missed on EPS.
in terms of performance, outperformance.
If you don't own
One factor
FedEx,
in
we don't care
particular,
about that.
return on equity.
Revenues, revenue missed slightly as
track
well.
the performance of that
Slightly,
factor,
though.
looking at how the
22.2 versus 22.4, it's a very slight miss.
Across all 11 sectors, that's been the winner. And I think that the monolithic sector call means you're buying a sector, yes, but you're getting great companies within it, you're getting terrible companies within it, and investing based on actual characteristics like return on equity and cash flow and profitability, interest coverage, even a valuation kicker in there. I continue to think that that's a better way to approach the market, especially in an environment where equal weight is finally having its proverbial day in the sun.
Okay, we're going to shift from Fed speak to FedEx. Those earnings are out. Frank Holland has the numbers. Frank.
Hey there, Morgan. FedEx shares down right around 7% right now after a miss on the top line and the bottom line. Looking deeper into the numbers, one of the big issues in this report is that its express segment, where it gets about half of its revenue, missed on margin by a pretty wide margin, no pun intended. Estimate was for 3.6% margin there. It came in at 1.7% margin, often seen as a proxy for efficiency. Remember, this is a company going through a business transformation and also a broad cost-cutting effort currently. So its ground segment seemed to be a bright spot. Margin beat there. Within the report, the company also reaffirmed its full-year EPS guidance. There were a lot of analysts that raised its price target yesterday, expecting a beat and a raise when it came to EPS guidance. Instead, it was a reaffirming of EPS guidance. We're continuing to go through the report right now. But again, a miss on the top and the bottom line for FedEx. A big miss on margin when it came to its express segment. Ground seems to be one of the highlights in this report. Full-year EPS guidance reaffirmed, and again, shares down more than 6.5%.
Okay, Frank Holland, thank you. John, I mean, we're seeing this phrase again.
So far, what this sounds like FedEx-specific problems and not economy-related problems, which is very good news for all of us. We'll see what happens in this conference call that starts here in about just over 15 minutes from now. But based upon those initial numbers there, it seems like it's more FedEx-related issues in the terms of why that stock's down, not economy-related issues.
Economic environment globally, since FedEx is in some ways a global economic bellwether with all the goods it moves through so many parts of the world on a daily basis. It'll be interesting to see what they have to say on the call about that, even amidst all of the cost-cutting efforts at the company. Company is also trading at about fresh 52-week highs as of yesterday, so perhaps not surprising to see investors selling off with the high hopes going into
not
this.
Not surprised at all.
Yeah.
Shopify downgraded JMP on 2024 income concerns. JMP Securities has downgraded Shopify to market perform from market outperform. Basically, before they thought it was going to do better than the market, now they think it's just going to do the same as the market. In its belief that its 2024 adjusted operating income will come below consensus. Consensus $1.03. We'll see. Yeah. Anyways, guys, I'm going to go have some lunch. I'm going to go prep for the main channel. Got a lot to talk about in that one. PayPal is going to be the main subject, but got a lot of other stocks to talk about. So appreciate y'all joining me as always. I was looking forward to that FedEx call, but that surely ain't happening because they want to do it an hour and a half after the freaking market closes. So that sucks, but it is what it is. And then let's see. Other than that, tomorrow. Well, we'll get to see if the market keeps up this move tomorrow. But tomorrow after the bell, Micron's reporting. And Micron, if you don't know them, they're one of the biggest they're one of the biggest memory chip companies in the world. And so their memory goes into pretty much, just about every electronics device out there. So they're going to give you some good information about what's actually going on in the electronics market, what's going on with smartphones, what's going on with computer sales, plus a lot of other end markets. But their memory chips are used in, oh my gosh, pretty much just about everything. So I think that could be a very interesting earnings we get after the bell tomorrow. Anyways, guys, appreciate you joining me. Much love as always. Hope you made some dang money out there today. It was a money maker, man. It was a money maker. We're on the path to 2. We'll see. Don't want to get too excited, okay? All right, guys, appreciate you. Much love as always, and peace.